Good morning, traders. Chris Bus here with Traders Profit Compass with Before the Bell, your place for actionable content before the market opens. Okay, it is 6:44 as I'm starting the video. And don't forget to run the player at 1.5x. I think you'll really like that speed. Got a lot going on already this morning. Bitcoin is getting slammed, down another 11%. I think it was down 10-11% on Friday as well. We're down to 34K. So effectively that's been cut in half over the last couple of months. Oil's down 0.4. Large caps and small caps down 0.25%. It was up fairly up into the green range when I got up this morning, but they've faded that. NQ down 0.4, gold up 0.4. Over on the macro front, not a lot going on today, but a lot going on this week. Today we've just got the Chicago Fed and a flash PMI number, but then all eyes will turn to Jay Powell on Wednesday when we've got the first FOMC announcement for the year on Wednesday at 2 o'clock, and then of course his presser at 2:30. And then just to lay it out, there's no Fed meeting in February, and then the next one will be in March. And there's this rumor going around that they might go 50 basis points right out of the gate. I don't know if they do or they don't. Almost impossible to front run that, but that will probably be some volatility coming out of that, either positive or negative. Earnings front really starts to ramp up this week. We've got Halliburton before the bell, and we've got a bunch of regional banks. After the bell, we've got IBM and some more regionals. Then tomorrow we've got some bigger, more important companies. Before the bell, we've got J&J, GE, Amex, 3M, and Raytheon. After the bell starts the FATMAAN names with Microsoft, Texas Instruments, and Canadian National Railroad tomorrow after the bell. So we've got a really, really big week ahead of us. Also, we've got the backdrop of the U.S., Ukraine, Russia tensions that could throw a monkey wrench into everything. And then we've also got the technical setup in the markets, which I'm going to get to now. So if you're new to the channel, welcome. Hit that subscribe button, the alarm bell, post notifications. Give me a thumbs up. Regular viewers, that really helps me get extra exposure within YouTube if you hit the thumbs up button. I really appreciate that. So let's start out on the VIX here. We had the selling on over the last several days. On Friday, we got another round, and we pushed VIX up into this 30 range. And you can see going back, that's been a range, except for here, where VIX has struggled. Now, I want to, so we're looking for, I think what we're looking for right now is a capitulation breakdown. I don't think we've got it yet, but this is kind of a perfect day to look for that. Moving on to McClellan, you can see that our oscillators are totally blown out to the downside. I mean, we're pushing minus 90. And if we jump over here to the NYSE, this was, let's see. Oh, I got NYSE on here twice. Let me give you NASDAQ. Yeah, there's NASDAQ at minus 80. And you can see back in time, reversal, reversal, reversal. This is COVID. And then you've got a bunch of reversals right in this range. Now, I was taught never to fight NYMO, and I think that's served us really, really well over the recent years. And what do I mean by don't fight NYMO? Well, if the rubber band is stretched to the downside, fighting NAMO would be a situation where you disregard it and you stay piled into shorts. And then what happens is you get that rip your face off short covering rally. So while I closed out, I closed out ARC over the last few days, and a couple of other XBI, biotech, small cap biotechs, and it's been painful to watch that selling proceed. I cost myself some money doing that, but it's been my experience that a reversal is coming. Could I have fine-tuned that a little bit better? Sure. You can always, nitpick how you traded it, but every trader is a product of things that have happened to them in the past, and there's been times where I've stubbornly held on to shorts trying to milk that last little bit out of them, and then get caught in a vicious short covering rally, and then end up giving a big chunk of that back. So today, I think with the and then there's another Wall Street axiom I want to pass along: bad selling never ends on a Friday. So here we are on a Monday. All the futures were green. Now they're not. So what could happen, and what I want you to be prepared for today, is a capitulatory plunge, and then a red to green hammer candle reversal scenario where this rubber band comes down and then snaps back for a rebound. And then we'll have to see if how high that rebound can go, given we've got Powell on Wednesday. So kind of a tricky setup. My main point over the last two slides is do not get caught short having a whole portfolio full of bearish short positions, because we are going to snap back. When and where, I'm not sure. But the farther we go to the downside, the faster and sharper that bounce is going to be. So looking at SPY, we lost our 450 level up here that we said was so important. And now we're right back down to the 200 here at 436. I think that's your pivot for today. You're either above the 200 or you're below it. Look for that candle today where they, bring it down, make it look really, really scary, and then buy it up and break back above the 200. That would be a nice active sequence for active traders to try and get that reversal in process. And the way I would do that is just key off of the 200 here at 436.50. Don't try to, when this big bar comes down, if that happens, don't try to pick that bottom, because the next bar might go even lower. Use the principle of bullish on a recapture of an important level. And to me, there's no more important level on the chart than the 200. So if you get a sharp break below and then a recapture above, I'd be a buyer there on a on a short-term active type basis. Same kind of look on the Qs, except here we're already well below the the 200 at 364. We lost that on Thursday and then had a follow-up move on Friday. I've got a little line drawn in here at 350 and then another one down at 342. I think those could be potential support points for a bounce or an undercut and then break back above. And here you see it on the 2-hour chart. So if we were to, come down, undercut 350 and then recapture it on the way back up, I think you can be a buyer there. But notice, definite downtrend. And what you can do also is don't forget your Fibonacci retracements. Let me just do that for you if you're uninitiated or not quite sure how to draw that. You start your fib at the high of the swing trade. And then this morning, when we make a low, you would place the bottom of your Fibonacci at the bottom of the final swing low, and then that'll give you targets to look for on a bounce. So just taking this example up here at the high, let's just say that this was the final low bar, and then you get green bars starting, then you can see exactly where the swing trades, exactly where the Fibonacci retracement levels are. And then what I like to do is look for places where the fibs line up with technical resistance. And then those are often the places that actually find the resistance, and then, another down leg will start. So drop your fibs in on any kind of a bounce sequence that you might see. IWM, very bearish posture. Why? Big consolidation range. We lost 1 year support at 210, dropped like a rock right through 202, and now we're down in this area here, right at the top of the gap at 197.50. That gap's about $2.50 wide, down to 195. We could get a flush this morning, come down and tag 195, get a bounce, recapture 197, and then look for a move higher. And you can see that 202 would be an area of resistance, but then all the way back up towards 210. Here's the 2-hour chart to give you some intermediate levels. But big picture. Small caps have broken down. They're below a 1 year consolidation. So as far as I'm concerned, anything below 210 on IWM, you got to be looking for the downside. And that downside target is between 187 and 190. So I still think there's a ways to go. And if you got a kickback rally of any substance that came back up into 210 and got rejected there, I would definitely be trying to load a duration short where you're not going to try and play for every little green candle. What you're playing for is a durable trend lower. And that would be, of course, after we get this relief rally, relax all the oscillators, have them go back up into the middle of the range, let the FOMC clear, let it do whatever it's going to do, and then pick a spot where it looks like that rally dies, and then you can reload your shorts and wait for the next down leg. I'm just going to go through the daily charts on the FATMAAN names. Facebook has played out very, very well to the technicals. We lost the 200 here. We came down. We had one day of a reach up candle that came right into the 200 that failed, and then it rolled over, came right down to our support zone at 305, undercut it a little bit. Again today, what would a capitulation candle look like? Well, we could go down, break 300. Every technician in the world, oh my God, we broke support. Come down, get everybody scared, put in a hammer candle, and then reclaim 300 and reclaim 305. So another scenario might be just to come down and tag 300 in reverse. So on Facebook, I would be looking for a move from low to high where you recaptured either 300 or 305. And I think that would be a nice active trade on the bullish side, playing for a bounce. Apple. All the moving averages have rolled over, and we lost the 50 EMA the other day. Now we're down in the middle of this gap, coming into some support here at 161. I've got a support range down to this trend line, down to 157.50. I want to show you the 60-minute chart. We filled the first gap. We've all but filled the second gap. And now I've got a third gap down here between 159 and 157, which would be the next objective on the downside. Notice a week or so ago, whenever we did it, we put in a measured move target for this A, B, C move. We've come down to it almost to the penny. Watch today for that same thing, the reversal candle. Come down, maybe hit 160 or the top of this gap, get a bounce, and then reclaim 162 and 164 for a bounce. So I'd be looking for support down at 160, 159 at the top of the gap. Microsoft, very, very weak posture. We've got earnings tomorrow after the bell, right down here at the 200. What would I be looking for today? Either 200 to hold or an undercut with a move back above. And if you were an active trader, I would be looking to buy a reclaim of the 200 down here at 294. This has been a fantastic trading stock over the last several weeks. I mean, you've got a mega cap name with a lot of liquidity moving, multiple dollars per day. I mean, from a $15 move here. I mean, all of these days were $8 to $10 moves. And you can really, if you get a runner on Microsoft, you can do really, really well. So it's had a lot of volatility lately, and I would expect that to continue as long as the market stays turbulent. Amazon, we talked about up here. I thought it was going to the bottom of the box. Actually blew right down through the bottom of the box. $600 wide consolidation range. So just from a technical standpoint, as long as Amazon is below $29.50. Where's the target? It's $600 lower than $29.50, which takes it down to $23.50. Now I'm going to have to do some work and go way back in the charts to find out where the support levels may be down in here. But for now, all you're keying off of is where is price in relation to $29.50. If it's below, you've got to be thinking bearish. And if it can recapture, good chance for a kickback rally up into the old trading range. So if there's one level to highlight on your chart for Amazon, it's $29.50. Google, just like we did on Apple and some of the other ones, we had a measured move, first leg down, kickback rally, measured move target, almost to the penny. You've got the 200 EMA right here at 26.25. You've got a little gap down here that goes to 25.75. I'd be prepared for a couple things. One, a little move this morning to the top of the gap with a bounce that recovers the 200, or go down and fill the gap, then reverse and head back up. If you got support at the bottom of the gap, that's always an objective place to try a long. It would be objective to try a long on a breakback above the top of the gap or a breakback above the 200, and then you'll have some resistance here at 2,700 on the way back up on any bounce. We know about Netflix disaster. I'm going to have to do some work on the chart, but you've got what amounts to $100, $110 gap above on Netflix. I will go back in the chart and work on where these support levels may be, but this sets up great for a bracket trade with a high at 409. You can alarm that. And you've got a low at 380. You can alarm that. And remember our bracket trade rules. You get a breakout above the trading range. You can get long and look for the gap fill. If you get a breakdown below the low of the trading range, the low of the bracket, you can get short below 380. In this case, just because of the position of the oscillators, I'm probably not going to be inclined to try and, short Netflix with the oscillator at minus 80 or 90. I don't think that's a good risk reward. But if you get a red to green and a break into this $100 gap, then I think that sets up well for the chance for a gap fill and a bounce higher into that gap. Semiconductors, what do we say? $22 trading range, break the range, measured move target, $22 lower, brings us down to 270 in this gap, and we're basically already there. We've got the 200 at 269. We've got this breakout level at 275. So what would I be looking for? I would be looking for a bounce at the 200 and the top of the gap, or a slight undercut to fill this gap and then reverse, recapture the 200, and then recapture the breakout level at 275. And just looking at the swiftness of this move, I'd be putting the Fibonacci tool on this starting up here at 312, going down wherever the final candle goes, and just eyeballing it. I would not be surprised if you got a kickback rally that brought this back right into 288 to 290, where you break down, back test, roll over. And then so that would not only, one, give you an opportunity to get a nice bounce trade, but also recycle at a much higher level for your shorts after all the oscillators relax and all that, and then make the next leg down. So this looks like a very promising setup for a bounce back into resistance that you can then fade. So I'm going to take a very cautious approach today. I'm going to be looking for a red to green reversal for bounce plays. I caution you on holding a bunch of duration shorts unless you're just playing, you don't care about the bounce. That's totally different. But if you've got any kind of short dated, in the next couple of weeks, short positions, those will be really hurt by any kind of a snapback rally. So pay attention to that this morning. And, if you did get that big flush move, use it as an opportunity to go to the bank, congratulate yourself, get paid, and then get ready for the reversal. So I hope that helps. This has been Chris Buss with Traders Profit Compass. Hope you have a good day of trading. Talk to you next time.